Today we are in a new neighborhood of Miami Beach that we haven't been on a walk with yet. And this neighborhood is called Bayshore. It's pretty close to South Beach. It pretty much is South Beach. It's kind of like the area where South Beach kind of turns into Mid Beach. And I wanted to come over here because they have lots of cool little walkways and things like that that cross the little canals and stuff that we have over here. So I figured it'd just be a different spot to do the video. And then we'll walk over by some of the multi-million-dollar mansions that are literally just a couple blocks from here. The first thing I want to start with, guys, is home prices are actually going down. I am not making this up. I'm going to put some Redfin data up on the screen as I'm talking about this, but this is what I discovered this morning when I was planning out this video. The median listing price in mid-May was about $402,000, okay? And then fast forward to today, the first week of September, the new listing price, the new median listing price is $377K. So it went down about $25,000 in just 4 months, guys. One interesting thing about this is that the housing crash typically comes pretty slowly. But in this case, I feel like it's actually coming on quite quickly, because going down $25,000 in just 4 months to me is pretty fast. And if we stay on this trajectory, well, it's pretty easy to calculate where we could be from here. Besides the listing prices, let's look at what the median sold prices were, okay? In the middle of June, median sold prices in the US were $394,000, okay? Fast forward to today, September. Now the median sold price is down to $370,000. In synchronization with the listing prices going down, the median sold price has gone down by literally the same amount, guys, $24,000 in even less time, because these numbers go from mid-June to right now. So we're talking like 3.5 months basically for prices to go down that much. So to me, that's already the sign that the housing crash is here. It has started. It has begun. Last week we talked about Canada and how, you know, homes there are literally $200,000 less now than they were in February. And obviously we're only seeing 10% of that, right? With homes going down $25,000 is nothing compared to 200 grand. But keep in mind that their housing market was way more inflated than ours was, so they're due for a bigger crash. And here, where real estate values are still relatively cheap compared to Canada and other places in the world, you know, we're going to see a crash here, but it's not going to be of the proportions that other countries are seeing, like the UK and Australia and Canada, New Zealand, places like this. And I even looked at these numbers in Miami, guys. We're not immune to this either, okay? Miami home prices are starting to soften as well. When we look at the median sale price in Miami, it went down from 530K down to 510K recently, okay? And if we look at Miami Beach, where I live, right here where we're walking right now, it has gone down by even more, guys. Look at this. $510,000 in June was the median sale price here. Fast forward to today, first week of September, we're looking at 436K. So that is about an $80,000 decline in just a few months. So I would officially say that Miami Beach is literally having its housing crash right now, which I'm kind of happy to hear about, to be quite honest. You know, I think this is good news. You know, I don't care about the value of my home or where it goes. I'm not planning on moving or anything like that. And this is great news for the housing market, if you ask me, guys. This is why I wanted to bring you guys over here, because they had this cool little spot where you can rent a piece of crap boat right there. Right across the street is the beach and the famous One Hotel. A lot of people probably know this place if you've ever been to Miami. And right here is kind of like the border of where South Beach meets Mid Beach, right at 23rd Street down there. Not gonna take you guys to the beach. I'm gonna save that for later this week. We'll head out to the beach. Now what's even crazier, guys, if we look at the numbers of Miami Beach, they actually went down way further than that, because back in February of 2021, the peak median sale price was actually up to $759,000, okay? And now we're looking at 436K. So you can see just how volatile the market is here. And honestly, it's pretty much always been like that, because I'll pull up the long history chart here and you guys can see our prices always fluctuate like this. This is not like really a new thing. So just how fast they're going down is just how fast they can go up. That's pretty much how it's always been. But I personally am happy that this is happening for a couple of reasons. One, it's going to help people out that have been looking to buy, especially in areas like this with prices finally starting to go down. Also, if you're a current homeowner, then you could potentially get a lower tax bill. Like I already shared with you guys that mine's going to go up next year, but maybe the year after that I'll be able to get it reassessed at a lower value if values here keep plummeting, so my property tax bill will go down. So I'm always looking at the positive in things, even though some of these videos might come across as negative, but you have to find the positive in the housing crash. And since we know that, you know, more than 80% of the people out there want to have a crash, this is excellent news. So we should all be jumping up and down for joy at this right now, because I certainly am. And this is going to be a great opportunity for me to pick up another investment property or two over the next couple years, which has been my plan, something that I want to do. But I'll tell you one thing that is not good news right now is Americans in general are in trouble with credit card debt. Right now, the average household owes almost $9,000 in credit card debt, guys. That is insane. I mean, when I went into credit card debt, when I was 18 to 20 years old, when I started racking up my credit card debt, I think my highest balance got up to about $5,000, and I started paying it down from there. But this is double that almost. I couldn't even imagine trying to get out from under a $9,000 credit card balance, especially right now with these rates going up, and you're going to start paying even more in credit card interest very soon with the new Fed rate hikes coming this week. So if I think about it like this, I got my first credit card when I was 18 years old, and I didn't climb out of that debt until I was 27, guys. So we're talking 9 years it took me to get out from underneath a $5,000 balance. So how are people going to get out of these balances that are $9,000 and up? Because it gets worse. They actually track this by state, and right now Alaska, on average, people are carrying the most credit card debt. The average balance there is over $11,000, guys. Then you go to Hawaii, it's almost $11,000. Virginia, up to $9,000. Maryland, $9,000. Connecticut, $9,000. New Jersey, $9,000. Colorado, $9,000. The list goes on, guys. I just can't believe the amount of credit card debt that people are hanging on to right now. And starting in a couple more weeks, the interest payments that you're going to be paying on these credit cards is just going to continue to go up. So this is bad news for anybody who has these big credit card balances right now. We got one for sale. You see how we transitioned? We went from the apartments back there to multi-million-dollar mansions over here. See how much this one's going for. I don't think this is the same house, I'm not sure. No, it is. You can't really see anything, guys. They got all these privacy hedges up there. But if you have this credit card debt, guys, even if it's not $9,000, even if it's $2,000, $3,000, whatever it is, get it paid off. Especially now, with these interest rates going up, this is going to be devastating to your monthly finances. It's going to take an even bigger chunk out of your monthly income, and it's going to make it even harder to get out from under. So you got to do balance transfers. Find cards that will do a 0% interest rate for 12 months or 24 months, whatever, and just pay the fee to transfer it. Get a personal loan if you can, although I prefer the balance transfer method because you're going to pay less in interest. Personal loans are going to cost you more, even though you might be able to consolidate all of your, credit card debt onto one loan, but it's going to cost more in the long run. So I'm all about getting out from underneath this the cheapest way possible, and the cheapest way is the balance transfer way, providing that you are making, the highest amount of payments you can every single month to try and get out of this debt. So please do yourself that favor right now. And it's not just credit cards either, guys. We have the Fed meeting this week where we know for sure they're going to raise the interest rates again by another 75 basis points. There's even rumors that they might do it by a full point this time, so we'll see soon enough. And this is going to make everything that you finance more expensive in the near future. We're talking within the next month. So these things happen very fast. So if you're going to be looking at buying a new car, financing that, if you're going to be looking at buying a house, financing that, it's all going to cost more, guys. It's not going to get cheaper. So everything's going to be going up. So get ready for that. And that's why I've been telling you guys to pay off the credit card bills as well, because this is just going to make it even harder to qualify for a house when you find that deal. And if you are someone that has their debt paid off and you're trying to save money right now and prepare for, you know, this recession getting worse and prepare for potential deals and investments coming up, guys, the upside to these interest rate hikes is the fact that the treasury yields are going through the roof compared to where they used to be, okay? You used to be able to get practically nothing investing in US treasuries, and then check this out. The 10-year treasury has literally hit the highest amount that it has been at since 2011. It hit 3.5%, and the last time it was that high was back in April of 2011. The 2-year treasury reached almost 4%, guys, 3.96%, the highest level since November 2007, when back then they were 3.94%, which is basically identical. And the reason I want to bring this up is for two reasons. One, this is another sign that we are seeing that is identical to 2008. We just read that the 2007 2-year treasury note was literally sitting at the same rate that it is right now, which means the returns were the same back then. So now we have another parallel that parallels the 2008 housing market crash. So all of these things that we're seeing, guys, are pointing towards what's going on right now. We're seeing the uptick in adjustable rate mortgages. We are seeing home prices literally coming down, sometimes by a lot, like here in Miami Beach, like I just told you guys about. We're seeing the treasury interest rates go up to a rate that might make it actually a good thing to invest in, which is why I wanted to bring this up, because you could get yourself into a 6-month treasury right now, or a 1-year treasury if you have money saved up, but nothing looks like a good investment. Because remember, guys, real estate cap rates right now are practically at an all-time low, because these high prices combined with high interest rates completely kill your profit when you're investing in real estate. I'm not looking at buying anything right now. I might even buy some of these treasuries in the short term to just have a little extra interest income coming in that I literally have to do nothing for. All I gotta do is click buy on my computer, and you can make almost 4% interest right now on some of these treasuries. But I'm gonna wait until the Fed meeting happens this week, and those rates are likely to go up even more. I think that could be a smart thing to do right now if you have some excess cash that you're looking to just invest in the short term, waiting to capitalize on the downturn. So that's something I'm gonna be looking at doing here this week as these rates go up. And all these interest rate hikes obviously has all these companies and economists completely spooked, right? Everybody's watching the Fed this week. And one thing I'm curious to know, guys, I'm curious to know what you guys think about this, is pretty soon we're going to be entering the 4th quarter of 2022, which will be in October. Then we will have been through 3 quarters of the year. And my question to everybody watching this is, if we have a 3rd quarter in a row of negative GDP growth, do you think that the government and the Fed and everybody who thinks that there's no recession right now is going to finally admit that this is a recession? Because 3 quarters in a row, negative GDP, guys, already has completely surpassed the actual definition of the recession, which is only 2 in a row. So let me know what you guys think is going to happen if we see this, which is coming real soon. We're already halfway through September, so it's only going to be a few more weeks for us to find out where the GDP numbers sit. So let me know. That big seawall right here by this intracoastal waterway, they've been working on this thing for like 5 years, guys. This street that you see with the cars on it was closed for like 5 years, no joke, while they've been building up this seawall, trying to protect Miami from the king tides and the rising water levels here. Because this street would completely flood. It would be a river during king tides and you know, heavy rainstorms, things like that. Now to me, guys, the icing on the cake here with this housing crash. We already went over how all the prices are starting to go down nationwide. The nationwide medians price points are going down for both listing and sale prices, and I showed you what's happening here in Miami. And the icing on the cake is now home builders are slashing prices. They are offering incentives once again to get into a brand new house. And this could actually be a great opportunity to get into a brand new house if that's something you are looking at, because nearly 25% of home builders right now are slashing prices on their newly built or in development homes because they know that this party is over, guys, that they need to unload these properties. They simply cannot afford to sit on these listings for more than a few months and before they just start getting decimated and their profits drop through the floor. So these guys are gonna be doing anything they can, especially after this rate hike, to start getting rid of these places. They're saying buyer traffic is still extremely low in a lot of cases. Many people are just sitting on the sidelines waiting, whether it's out of choice because they think that things are going to come down or simply because they can't afford it. So these are the kind of things they're going to be offering, guys. They're going to be offering you incentives, okay? They're going to be trying to give you mortgage rate buy downs, all right? They're going to be giving you free amenities. They're going to be giving you free upgrades to the house. Think of things like upgraded kitchen cabinets. Think about the free granite countertops, free extra bedroom, different things like that, guys. So that's why I'm saying this might be a good time to start looking at these type of deals if it's something you were thinking about already. Got another one for sale here. Let's take a look. This one we can kind of see. It's a new listing, guys. For only $17 million, this place can be yours. Any takers? But the one thing I'll tell you is if you guys are going to be out there looking at buying one of these brand new houses, just research the reputation of the builder, and if possible, try to talk to other people that have already bought homes from them to see if the experience was good. You know, what was the quality of the workmanship and things like this, just so that way you guys don't get yourself into the money pit, if anybody's ever seen that movie, because this can happen with the brand new house too. And even though you have a warranty, they still have to come out and you know, check the place out and fix it under warranty. So you could be stuck with a problem that you really don't want for longer than you would like if you're not careful, guys. So when there's opportunity like this, you have to take advantage of it. And one of the best incentives to me that they're offering are the mortgage interest rate buy downs, which could come in tremendously handy right now as they keep increasing these rates, guys. But one thing you want to look at is that rate decrease temporary? Because what some of these builders will do is they will make it on a sliding scale. Well, your first year, the payments are going to be $2,000, and the next year it'll be $2,200, you know, and then the third year it'll be $2,500, and your interest rate will slowly go back up to what the 30-year rate is now. So if it's that kind of thing, then you need to make sure that you can afford what the final payment is going to be once your rate has fully matured. So make sure to pay attention to all these things. Let me know if you guys are going to be taking advantage of any of these new construction builds out there, now that these new construction sellers are going to be getting desperate. If you guys enjoyed this video and you found it entertaining, please subscribe to the channel. Check out my next video on the screen right over here, and I'll catch you over in the next one.